All right, so if all this stuff blows up, that sounds like deflation. At the same time, you've got the Fed printing money, which, of course, is inflation. So going forward, following this year coming up now, who's going to win the titanic battle, inflation versus deflation?
Well, you have a commodity price ramp right now that is largely speculation and a expectation of forward inflation. You have a bond market that is at the tipping point, and you're seeing the curve flatten out, which is not a positive sign at all. People talk about the long end of the curve going up, but they're not looking at the 2-year and the 5-year, which have been on an absolute tear. So my expectation here is that ultimately deflation wins, but of course Bernanke is trying to prevent that from happening. I just don't see how you can call it deflation when we had massive asset price inflation for a decade, and then you're going to revert back to the mean, and all of a sudden this is the boogeyman. I don't see it that way. I look at this more as reversion to the mean rather than actual outright deflation.
Right. So inflation, deflation, of course this relates to the currencies. What's your take on the dollar, the euro, and the currency war that people are talking about? Who's going to be the winners and losers in this currency war, and your comments on the dollar and the euro?
My opinion is that the euro is going to parity with the dollar, maybe below. I would not be surprised to see the European Union fracture. I am rather surprised that it's held up as well as it has. I was looking for par this year in 2010. It didn't happen. I think it will be coming, though, and again, the ECB and the European Union are trying to do essentially the same sort of thing we're doing here in the United States. It's all a game of kick the can, try to find a way to make things work for today and not worry about tomorrow. I don't see any way that they avoid a restructuring for all of the periphery, all of the pigs. They're trying to prevent that from happening, but I think the market's going to force that on them, and I expect to see the spreads start to widen out in the euro weaken. This is short-term very positive for the dollar. In the intermediate term, the problem you run into is that China is going to be forced to break their peg because the inflation that we're actually creating in the credit markets and in the currency is being exported over to China. They're currently running inflation numbers. They say it's 6 or 7%. I don't believe it. I think it's closer to 20. And my guess is that part of the intent here is to force them to drop the peg to the dollar and let the renminbi float.
Okay, that's a huge piece of news there, if that does happen. Let's talk about it a little bit here. Talk about the peg, what it's done for China and the U.S. over the past few years, and then talk a little bit about what happens when you take it apart.
Well, the peg has allowed China to essentially keep a weak currency that tracks the dollar as a weak currency, and it's a great policy for them except for one problem, which is that all of the flows, the capital flows that come into China as a consequence, they have to be sterilized somehow. And when the Chinese central bank runs out of the ability to do that, you see asset bubbles and inflation show up in the Chinese economy, and that's exactly what's happened. The property market over there and the asset market in China has been on an absolute tear, but none of it's sustainable. You have entire cities that are selling at crazy multiples if you're buying real estate, and nobody's living in them. So this is all a matter of how do we absorb all of this hot money flow that's occasioned by the trade imbalance. And it only looks good as long as it goes on. But like all Ponzi schemes, Max, eventually it ends. You're building a pyramid based on the point instead of on the base. It's upside down. When the peg breaks, you're going to see a number of problems. I'm very concerned about the possibility of mass civil unrest over in China because once the peg is broken, the export advantage that they have in price to the United States to a large degree disappears. And if that happens in a disorderly fashion, instead of people doing things in a sane and orderly manner, you could see export traffic out of China into the United States fall by 30 to 40%, essentially instantaneously. Take a look at Foxconn's employee base and cut it in half and tell me what happens to the other half of the people that used to have jobs and now don't.
Right, Foxconn being, I guess, the largest in the technology space. They build a lot of the Apple computer components, et cetera. So, but there are some pundits out there, Karl Denninger, who argue that, okay, we're going to free the RMB, and now the Chinese are going to have a higher purchasing power, and they're going to be picking up the slack themselves by developing this middle class. They'll be able to afford the products that they've been manufacturing. What's wrong with this argument?
Nothing. In the long term, it's the right thing to do. They should have dropped the peg 10 years ago. But, the the problem with mercantilism is that it works right up until the point that it doesn't. And then when it breaks, there are bad effects in the short term on both sides.
Let's go to the last two questions here for the big year-end prediction special with Karl Denninger of market-ticker.org. Okay, I'm going to ask you about markets, which way the Dow, up and down for the year, and your thoughts on bankers in prison. Are we going to see any banksters in prison this year, Karl Denninger? Dow Jones and banksters in prison. Your thoughts?
I think the Dow is going to have a major problem at some point during the year. The early part may be relatively positive. There's a lot of momentum right now in the market coming into the end of the year. There are many things, though, that can upset that apple cart, and I'm surprised we did not get any of them that turned into realized risks as opposed to potential risks in 2010. I don't believe that track record is going to hold up. There's a lot of people calling for 1,400 in the S&P and 13 to 14,000 in the Dow. I think that's fanciful. I also don't think the profit picture is going to hold up because the margin compression that I'm already detecting in things like the ISM strongly imply that we're going to see margin collapse become a major theme sometime in the first and second quarter. So my expectation is the markets will end down from where they begin on the first of the year. In terms of banksters going to prison, I certainly hope so. The big issue there is simply that Eric Holder, for all intents and purposes, warms a seat in Washington instead of actually leading prosecutions. If the people get angry enough to force somebody like Bill Black back onto the scene and we actually see real forensic fraud audits, and by the way, Janet Tavicoli called for this in front of federal regulators, and if we actually were to see that kind of an outcome, then yeah, I think you're going to see a lot of banksters go to prison. Even if we don't get them at the high level, though, Max, I do believe that we're going to see probably dozens, maybe hundreds of lower-level bankers that end up going to jail in an attempt to placate the public. It isn't going to work, but that's what they'll do.
Right. Bill Black, of course, being the regulator in charge during the S&L crisis, who put, I think, up to 1,500 bankers in jail. All right, Karl Denninger. Well, that does it for our New Year's Eve special. Thanks so much for being on the edge, and have a wonderful New Year's Eve there in Niceville, Florida.
Thank you, Max. Have a wonderful time.
All righty. And that's going to do it for this edition of On the Edge. I want to thank my guest, Karl Denninger. His site is market-ticker.org. If you want to send me an email, please do so at ontheedge@presstv.com. Until next time, this is Max Kaiser saying bye, y'all.